Buyers slipped out of the grain markets today. Downside corrections across the board except for soybean meal. Bean meal found support from spread unwinding to close higher. Lean hog futures held on to moderate gains, while another surge in beef demand helped bring buyers back to the cattle complex.
Live from the sunny spot betwixt the clouds via Farm Journal broadcast, this is AgriTalk. This afternoon, we'll chat with Pro Farmer's own editor, Brian Grete. Directly following the news, Brian Splitt from agmarket.net. I'm the handsome newsman, Davis Michelson. Now, here's the host of AgriTalk, Chip Flory.
We've got some sunny skies up here in northeast Iowa, too.
I get the feeling it's only going to be sunny here long enough for me to brag on the beautiful weather down here in the southern central tropics.
Yeah, because Missouri is pretty much covered up with scattered showers right now.
Yeah. I think there's just a hole in the clouds above us here.
Yeah, could be.
Well,
but those
it's
rains...
a hairspray. It's a hairspray I was spraying in the backyard. It finally starting to pay off.
Gotcha.
Got some sun.
But those showers make their way up into south central Iowa, southeast Iowa, even east central Iowa. There are some showers. Then Illinois, Indiana. The eastern belt is behind and getting further behind on some of the corn plantings over there. Welcome to AgriTalk. I'm Chip. Glad that you are with us on this Tuesday afternoon. And, of course, we've got the wonderful, the talented, the very handsome Davis Michelson with us as well.
I got to wonder, you're too kind. You're too kind.
Yeah.
You are also beautiful and handsome and very talented in various ways. I'm curious, on days like today, you talked about that rain right through the gut slot of corn country, right?
Yeah.
Corn and bean country. I wonder how many of our good listeners, rather than listening in the tractor cab, are listening in the machine shed today.
Yeah. There's a few, I'm sure.
Maybe they're sitting in one of those chairs like you make it out of an old tractor seat. You sort of weld it to a little post. You're sitting there. Maybe
weld it onto a milk can.
Boot up on the anvil,
Yep.
When is it going to be go time?
Just kicking it back and waiting.
We feel your pain, gang. We feel your pain.
I'll bet they can find something else that needs to get done out there, too.
Well, and nothing else, break something. Then you get the joy of repairing it.
There you go. We're going to talk with Brian Grete this afternoon, but as soon as we're done with the news, we'll get Brian Splitt from agmarket.net in here. Let's hit it.
Chip, wheat futures tried to rally early in the session, but prices fell under the weight of a downside correction. July soft red winter wheat futures spiked resistance at yesterday's high before turning back to post a low-range close. USDA rated 50% of the U.S. winter wheat crop in good to excellent condition as of May 12. That was steady with the previous week. Traders this week will pay close attention to the annual Wheat Quality Council's tour through Kansas as scouts ground truth yield potential. Traders are also reacting to news that Russian farmers have seen crops destroyed by bad weather on roughly 1.2 million acres. July HRW wheat futures were 16 3/4 cents lower at 6.83 1/4. July SRW wheat down 14.5 at 6.72 July spring wheat closed at 7.33 1/4, down a nickel today.
That's 2 weeks in a row with 50% of the U.S. winter wheat crop rated in good to excellent condition. So some stabilization in the U.S. winter wheat crop conditions.
Corn planting as of May 12 stood at 49% complete. That's 5 points behind the 5-year average pace. Emergence, however, is 2 points ahead of the average. The risk of upcoming planting delays limited selling in corn futures. USDA this morning did announce the sale of 405,000 metric tons of corn to Mexico. Of the total 135,000 for delivery in the current marketing year, 270,000 sold for new crop delivery. Brazil's stabilized conditions on the safrinha corn crop put a cap on early price strength. July corn futures posted an inside trading day with a mid-range open and a low-range close. July corn futures were a nickel lower at 4.67 1/2. September corn down 3 3/4 cents to 4.78. December corn futures closed at 4.91, down 2 cents today.
If you are bullish on corn demand, you better be saying thank goodness that Mexico is out there and buying corn, because that's our primary buyer by a long way in this marketing year.
Well, it was a big-time spreading day in the soy complex. Soybean meal posted solid gains with soybean oil futures sharply lower. Uncertainty over the potential for tariffs on imports of used cooking oil recently brought buying to the bean oil market, but that reversed today on speculation the veg oil industry would rather not deal with import tariffs.
Yeah.
Lower bean oil prices weighed on bean prices, as did the 1.2 million metric ton increase in CONAB's Brazilian bean crop estimate. The agency raised its Brazilian bean crop peg to 147.7 million metric tons. USDA says 35% of the soybean crop was planted as of May 12. That's 1 point ahead of the 5-year average here in the U.S. July beans posted a high-range open and a mid-range close. July beans were a nickel lower, 12.14.5. August beans down 5 1/4, 12.18 1/4. November beans closed at 12.05 1/2, down 7 cents.
Yeah, those crop estimates, you get the momentum going in one direction, takes it too far to the downside. Now CONAB is coming back up just a bit on its corn crop or its bean crop estimate. So there's going to be lots of competition from Brazil for soybean exports in the months ahead.
Well, July cotton today was 300 points lower at 74.63. Look out to the October cotton contract, down just 156 points at 75.50 there.
Ugly.
On your livestocks, heavyweight choice graded boxes rallied $4.38 on Monday and tacked on another $4.65 this morning on good movement. That helped push the cattle complex higher. June fats up 260, 178.17.5, and August feeders 432.5 higher, 255.67.5. And lean hog futures opened higher and posted an inside trading day close below the opening range. June hogs 85 cents higher today, 98.32.5. Chip.
Thank you, Davis. Brian Splitt, agmarket.net. How you doing, Brian?
Doing great, Chip. What's going on with you?
Well, I'm pretty impressed with the move that we've seen in the corn market, that's for sure. How about you?
Yeah, it's been good. This is the seasonal tendency. We should be going up roughly this time of year. And when I think the one contract everybody is hyper focused on is the D's contract, D's 24, just so we can get a good amount of marketing done on new crop on this rally. And so what we broke out of when we got through 480 was an ascending triangle that's characterized by numerous highs all at the same price and an uptrend that's established below those highs. So going all the way back to early February, we had highs at 480 3/4, 481, 480 and a half. So breaking through there measures to 515. And so you and I have talked a lot about D's 2014 versus D's 2024. Interestingly, there were two major peaks made on that 2014 contract. One was 517. The other was 514 3/4. So the measurement on this D's 24 contract, independent of what we do comparing to a decade ago, suggests that 515 is the ultimate upside target on that breakout. So it looks like to me you still have some upside to go here. Probably make a high if the timing is similar to 2014. Maybe sometime mid to late next week if we can continue this pump here.
Wow. And I'd be tempted to say, you know what? Let's give the market an opportunity. It's only a week and a half away on a timing basis. But dang, it kind of feels like we need to keep selling on the way up, doesn't it?
Yeah, I don't think you wait for just all of it at one spot. You should be scaling into it, and you should have a number below the market too, where you say, I don't want the market to get below this before I take action. And I think right now 480 is that support that we have to hold to keep it looking good.
Line in the sand under the market. Got to have it. Brian Splitt, agmarket.net. Thanks, buddy. We got Brian Grete, Pro Farmer, next.
Chickens have come home to roost. Find out whose fence they're perched on today on AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad you're with us. It's Tuesday afternoon. Yeah. There it is.
Okay?
That's it? That's all
You
we're
good?
going to take? I thought maybe we'd let that play a little bit more and get into a little bit of debate because we could get today's guest into the debate as well on exactly what they're talking about with the next 30 years.
I'm just
Follow
trying to keep
through to
things
its
moving
proper
along.
conclusion. It takes me to 106. Now
Is that it?
My dear grandmother did hang on till 104.
Okay.
So I would say 106 is in play for a guy that's just strapping. Healthy,
Now,
vigorous.
That
Vigorous is what people
that
say.
grandmother, was that on your father's side or Bubba's side?
That would be Grandma Bubba. Yes. Yes.
Oh my goodness gracious! They weren't listening today, were they?
They never listen.
No.
They're not convinced that there is a radio show. You
That's
know?
right. That's right. And they're pretty sure that there's a radio show. I think they remain unconvinced that it's you and I that are doing it.
It might be that, yeah.
Yeah. Brian Grete, editor at Pro Farmer, is our guest analyst today. Brian, how you doing, buddy?
I'm awesome, Chip. How about yourself?
Yes, you are. I wish I was half as good. Yeah. So summer's almost here. You boys got big plans?
So Drew is umpiring
Okay.
both high school and U trip. So he did his first high school game yesterday,
Good for him.
and Josh is playing baseball, but he's on the shelf right now with a broken wrist. So
Oh man.
yeah, he's
Yeah,
him and
that
him and
stinks.
springtime injuries are rough. So he's base running though. He got approval to run with the cast, so.
Good.
He was on 4 times last night. Got to run 4 times, scored 4 runs, had 3 stolen bases. So he's in mid-season form with his running. We have to
Beautiful.
get him up to speed with the hitting and pitching and throwing and stuff. But
Yeah.
he's all right.
Good. Well, you got a busy summer coming. There's no question about it. I've got a graduation to go to tonight for my granddaughter. So,
Wow.
yeah, graduating from preschool.
Oh yeah, I was gonna say she's advanced. Like what was that? Doctor Doogie something.
Yeah, Doogie Howser.
The
Yeah,
math
no.
you just
Yeah.
made me do, Chip, it hurts my head. I
What's
almost
the
didn't
pro-
survive that.
That's
Yeah,
part
I
of the
do.
next 30 years.
I
Yeah,
guess.
There it is. I knew the connection would come back around. All right, let's get to last week's supply and demand report, and it's the first official look at the new crop marketing year. But I want to start with the old crop, and let's start with corn on the demand side of the balance sheet, because they added some demand that you and I honestly have been talking about for quite some time. On it had to be added at some point, didn't it?
Yeah, absolutely. Been clamoring for those increases, and is often the case. USDA's kind of they slow play it, but yeah, we ethanol use, exports, and they both, like I said, they both could have been increased. The feed and residual use, it was unchanged, but I think you could add to that as well.
Right. And I think, well, it kind of depends on where everything ends up as far as what the grain stocks numbers tell us, but they may or may not add to that feed and residual number going forward. If grain stocks are coming in a little tighter than what is maybe anticipated at this time, that's where they will make up the difference. They'll add it to the feed and residual number at this point, I would guess. What about on the new crop side of things? What really stood out, or was there anything that stood out to you on the new crop?
I'll go right to the bottom line. I think the ending stocks at 2.1 billion bushels for new crop. It came in obviously above the current marketing year, but not as much as anticipated. And I think there's now a pathway if you cut some off of that trend line yield where you can get down to into the 1.8 billion bushels or so, which is kind of borderline of what the market considers to be ample to surplus. And so just psychologically, if you get under 2 billion bushels, that helps. But if you get down to 1.8 or lower, that starts to help even more from a price perspective. So, there are people out there that argue that 181 is too high from a trend line perspective anyway, and I guess I'm in that camp. It seems like it's not that it's unachievable, but we just haven't achieved trend line for a while now in corn,
Right.
and so I ideal growing conditions, and sure, I think you can get there. Anything less than that, and you're probably going to end up something sub trend line. So I think that there's maybe not a bullish case, but not necessarily as bearish and potentially bullish as we move through the growing season.
So, it's very. I know that today is May 14th, but have we already delayed planting on enough of the corn crop to put that 181 in question?
So here's the deal with the planting. So, a little bit behind what the average pace is. The benchmark is kind of 50% by May 10th. Mm-hmm. And we didn't quite get there, 49 as of May 12th. So kind of just splitting hairs on that. Mm-hmm. It's where the plantings are delayed that is my biggest concern. Not that they are running behind the average pace. It's the areas where they're located at. And we're talking the big states, Iowa, Illinois, those states are running behind. Nebraska's running behind. Minnesota's right on pace. And so that's probably my bigger concern at this point in time is where those acres that are behind are located.
Yeah. And Illinois, Indiana getting Ohio as well, Missouri getting rains again today. It's not like if it turns off sunny this afternoon, they're going to be back in the field in 48 hours.
No, pretty saturated in some of these areas. And so, we got off to such a quick start, especially down in Missouri and Kansas and that southern, southwestern Corn Belt area. And even in Iowa and Illinois. But boy, the last, I think 3 weeks here, we've had like 10 inches locally or so, 8 to 10 inches, somewhere in that range. And so it's gotten quite wet. We were the dry spot on the drought monitor, and it's virtually gone at this point in time. It probably show abnormally dry still, but I don't think we're abnormally dry.
No, we've got some moisture available right now. That's for sure. Same kind of question on soybeans. 35% planted. Is there enough unplanted late enough to start to whittle away at that 52 for a national average trend line?
Oh, probably not. I mean, honestly, we wouldn't even be having this conversation if it was 5 years ago because planting date didn't matter, right, on soybeans. And that's like within the last 3 to 5 years that we've started to talk about that more. And guys have been more concerned or diligent, and however you want to put it, in terms of getting their soybeans either planted or the feelings toward unplanted acres. So I'm not concerned on that front. I think the bigger issue for soybeans is what happens with La Nina as we move forward, because if that develops by that, let's say, July timeframe, we all know that August, September weather is very critical for how the soybean crop ends up yielding.
Yeah. Does it feel to you like corn and soybeans have had a role reversal here over the last 3 weeks? Because it was hard to come up with that positive price outlook for corn, and a little easier to come up with a positive price outlook on beans. But here we are 3 weeks later, and it feels like it's just the opposite. I'm more willing to talk positive about the outlook on corn.
Yeah, I think so. And, a large reason for that, I think, has been the explosion higher in the wheat market. So the funds have just decided to cover shorts in the wheat market. And so obviously in the relationship standpoint, corn's related closer to wheat than what soybeans are. And so that, I think that more than anything, that probably helped flip the script, so to speak.
Man, that wheat rally has made it, I won't say has made the rally in corn easy, but it's certainly made it easier, hasn't it?
Oh, absolutely. Wheat is the clear upside leader, but corn's a willing participant.
Right. Okay. We are in the middle of a conversation with Brian Grete, editor at Pro Farmer. We're going to talk about imports of used cooking oil. We're going to talk about the change in the fund position. And then we've got to talk the economy and beef demand with Brian coming up next.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 16 3/4 cents lower at 6.83 1/4. July SRW wheat down 14 1/2 cents to 6.72 1/2. On your corn side, July corn futures a nickel lower, 4.67 1/2. December corn futures closed at 4.91. That's down 2 cents today. July beans were a nickel lower, 12.14 1/2. November beans closed at 12.05 1/2. That's down 7 cents on the day. July cotton today 300 points lower, 74.63. On the livestock's June, fat cattle up $2.60 to 178.17 1/2. August feeder futures 4.32 1/2 higher at 255.67 1/2. June lean hog futures 85 cents higher on the day at 98.32 1/2. Get more, visit tryprofarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. We've cleared the schedule for you. Give us a call at 855-482-5524 and join the conversation.
Welcome back to AgriTalk. I'm Chip. Glad you're with us. We are in the middle of a conversation with ProFarmer editor Brian Grete. Brian, let's go back to the soy complex and the way that market traded today. Soybean meal, solid gains, $5 to $7 higher in most contracts, but soybean oil really got hammered, 160 to 185 points lower. It looks like a typical spread trade, but there was actually some fundamental conversation going on with the pressure on soybean oil, wasn't there?
Absolutely. So that's part of the used cooking oil discussion that you teased ahead of the break there. And the thought was the past couple of days, the soy oil market really caught fire, thinking that part of the Biden tariffs on Chinese goods would include used cooking oil. And there's concerns on the U.S. front from that, and that some of those might be tainted and they're not fully used cooking oil, that they're mixing them with other oils, palm oil in particular, and those types of things. So there's been a push by the oil seed industry here in the United States to have those have some tariffs there. But Biden's list did not include the used cooking oil, and you see what happened in the market today. So it really deflated the balloon, so to speak.
Yeah. I'm a little confused about what's going on from the National Oilseed Processors Association and some of the others in the veg oil industry, because it feels like mixed signals, or am I just reading it wrong?
Well, so NOPA actually came out and said that they haven't pushed for it, so to speak, that they're kind of, let's say, fighting for oilseed producers and those types of things. So
yeah,
I think it's about protecting domestic demand and the processors as much as anything. So this one is like so. Soy oil and all the global oil seeds markets, for that matter, there's you have your fundamental factors, but you also have your policy factors that can influence the fundamental factors, and so you drive more speculation in that marketplace in those type of environments, and that's what we're seeing in soy oil, and it goes all the way back. I mean, you can roll this back for a while. When we started talking about renewable diesel and SAF and all the biofuel stuff that's going on. So it's been a highly speculative driven market for a while now.
Yeah. And vulnerable to speculation over what's going to happen with some of these policy decisions.
Absolutely. And major price swings because of that. So whenever you get increased speculation, you get increased volatility typically, and those types of things. And it's like walking into a casino right now and throwing your money down.
It is.
And it's either big money winner or big money loser, and
Yep.
that seems what the soy oil market is right now.
Absolutely. It certainly does feel that way. Soybean meal, was it just solid gains there? Was that just because of the spread unwinding, or are there some fundamentals behind that move?
Yeah, so they've been active spreaders in the soy product markets for a while now, and so I don't know. Some of the stuff out of Rio Grande do Sul and in far southern
Yeah.
Brazil with the flooding and things like that. So I saw some estimates today that like 10 to 15%, I think, of their crush capacity is idled because of the flooding and those types of things. Now, Argentina obviously is the bigger of the two in terms
Yeah.
of global meal and oil exports. But so I don't know if that got into it somewhat, but boy, the spreaders have been really active
Yeah.
in meal and oil here recently.
Yeah. Yeah. The funds have been active in the grain markets, getting out of some short positions. Last commitments of traders report showed significant exit of those short positions, didn't it?
Yeah, and it's so hard to gauge the fund activity
Yeah.
just because the CFTC data is so delayed when we
Yep.
get it.
Yep.
And then day-to-day estimates, there is not a good
Wrong.
source out there in terms of day-to-day estimates. I mean,
Right.
they're always seemingly bigger, either on the sell side or the buy side, and sometimes significantly bigger than what the estimates are, and just really hard to gauge what the fund activity is outside of those CFTC reports. And like I mentioned, those are just so delayed that there's no real gauge on where we stand at the moment with the fund positioning. And the critical thing is there that when you get money flowing actively like it is currently, then that's when you need it or clamor for it the most. Where's the funds actually? Where do they actually stand?
Yeah.
And you get a general idea, but no one has a real good grasp of that.
Right. Right. Okay. Okay. Um, so what do you want to what is your attitude on corn, soybean, and throw wheat into it as well? What's your attitude on marketing and risk management right now?
Oh, you definitely have to sell strength. There's no doubt about that. I mean, you have to when the opportunities are you know presented, you have to take them. And I'm just going to go through the new crop ending stocks numbers.
Okay.
So for corn for 24-25, they would be the highest since 2018, 2019 for corn.
Okay.
Soybeans would be the highest since 2019, 2020,
Okay.
and wheat would be the highest since 2020, 2021. So
Okay.
multiple marketing years for both of those or all three of those. And so to flip the script to bullish from where we're at right now takes kind of a leap, and you're going to have either some weather problems here or globally. You're going to have to do something to spark demand in what would then be a rising price environment, and so it takes quite a bit. And then keep in mind, on-farm stocks, especially for corn and soybeans, are hefty. So you're not the only one that's going to be selling. Your neighbor's going to be selling, and the guy a county over is going to be selling, and the guy in the next state is going to be selling,
Yeah.
and so you just can't sit and say, well, yeah, today's price is good, but I'd want a quarter more
Yeah.
without doing something about it.
Right. Okay. Normally, I would counter that with, yeah, but Brian, you got to watch out for China. You just never know when they're going to step in and start buying up stuff. But after the way that they bought wheat and then canceled, after the way that they found a way to stay out of the bean trade, it seems, and stay out of corn as well, and then throw on top of it the tariffs that the Biden administration just put on, I don't see China coming into the U.S. grain market anytime soon. Do you?
No, and China likes to send smoke signals, but last Friday, in their version of the WASD, they came with significantly lower numbers of imports,
Yeah.
especially on the corn side of things, and also for soybeans. So they're, I mean, we have to kind of take it with a grain of salt with the numbers coming from China's ag ministry, but you also kind of have to take it what it is on the surface, and that's that they're going to import less than they did in
Yep.
the current marketing year.
Yep. Yep. That's right. Okay. Yesterday, the heavyweight choice box beef market up more than $4.50. This morning, up more than $4.50. Big move in 2 days on decent movement of beef, and it turned into some buying in the cattle complex today. Feels pretty good.
Yeah, absolutely. The cattle market needed today, to be honest with you. The futures really needed today's price action from a bullish standpoint there. And it'd be really nice if we get active follow through to the upside. I think that the Packer has done a really good job of slow playing the supply situation, the tight supply situation, and stringing it out to the best of their ability and those types of things. They've slowed slaughter runs. They've backed up the marketings to the point where they can manage the supply. The carcass weights are up significantly, and so there's more beef, even though there's fewer head of cattle coming to market. So from a supply perspective, it's still bullish longer term, but we need some positive developments. And the biggest thing there is like we are trading well below the cash market in the live cattle futures. So it's a cautious, if not pessimistic, attitude by the traders at this point.
I kind of feel like we just need to let the cattle market trade for a bit and keep risk in the cash.
Yeah, I think so. You're just so far below the cash market at the moment that it just doesn't make a whole lot of sense, to be honest with you.
Okay.
To have heavy hedges on.
All right. You like anything about the hog trade right now?
No, not in particular. No. Seasonally, we've stalled out the cash advance, and so it probably came a month later than what it typically would. But boy, they've taken a lot of premium out of the summer month contracts, actually too much. We're not that much above where the cash index is at. So the index tomorrow will be at 91.29 and settlement today is 98.325 for the June contract. So what is that? $7, just over $7 of premium. Seems pretty cautious there as well.
Yeah, it certainly does. Give me 20 seconds on cotton. Ugh.
Cotton's ugly, and today was potentially one of the ugliest days that we've had in that market. Just a washout in a market that's already in a steep short-term downtrend. Just can't get out of its own way at the moment.
That is a falling knife, is what cotton is right now.
Nobody's willing to catch it either. I mean,
no way. All right, Beach, great job as always. Thank you, buddy.
You betcha. Glad to be on.
All right, Brian Grete, editor, Pro Farmer. Davis and I will be right back.
In the morning, you're coffeeed up and you're thinking. In the afternoon, you've calmed down, but you're still thinking. We're here all day. AgriTalk. I'll tell you what you do, man. Thanks for tuning in to AgriTalk. Your pal Davis Michelson here. Here's what you do, Chip.
Okay.
You get yourself one of them fancy bagel cutters, okay? You drop it in the top. It cuts the bagel in half for you. You don't even have to think about it. Exactly. But instead of putting bagels in there, you start dropping your glazed donuts in there. All right?
Okay.
Now you have a platform on which you can begin to build. Bring in your ham, bring in your bacon, whatever you like. Put it right on the bottom part of that donut.
Okay.
Drop the top back on. In the gullet she goes.
Nice. Nice. Savory
this is a new
and
business
sweet,
idea for somebody.
all in one.
Yeah, see? You get all of the best foods ever. All in one delicious bite. There's an entrepreneur out there. I hope you're listening and paying attention, because someday I want to come to your donut sandwich shop and eat one of these. I don't know who you are. I don't know where you are. But for the love of Pete, let's get it done.
I wonder how the pastrami and sauerkraut on glazed would taste.
I'm willing to find out. And if it needs, if it requires someone to do taste testing before you're going to, make the investment, I understand that. I am here for you. I'm here to help.
Yes. Good for you. Such a giver.
Well, I'm here to help the community is what it is.
That's right.
It's about empowerment. Also donuts. Also the donuts. Brian Splitt put some numbers out here for us.
Yeah.
Talking about upside targets for the December 24, and he's also talking about a support target for the December 24. Equally important to have both of those in mind, isn't it?
Exactly. Line in the sand. It's just as important as having the upside target.
Yes.
All right. And I'm not going to go all through it right now, but I've talked about a strategy that we implemented, or when I was at Pro Farmer, we used it quite often, and that was a trap strategy. And that was the combination of upside price targets with resistance levels, but you also had a line in the sand at support, and you actually let the market continue to climb and go through those resistance levels while raising the support level or the line in the sand under the market. That would actually trigger or trap you into some sales. And boy, that whole strategy and the whole concept was going through my mind as I was listening to Brian Splitt talk about that. And I think it's solid. You get that line in the sand, the support under the market, just as important as the targets above.
Mm-hmm. Absolutely. I'm looking something up here really quick. Brian had a really interesting comment about planting progress. 49% planted compares to 54% on average. Yep. He likes to see, and maybe this is a thing that I just haven't clued into, about May 10. You want to be about half done with right. National corn planting. We're at 49% on the 12th as of the most recent report here. But he raised a concern, not about planting progress necessarily, but the locations where planting progress has been stalled. That was interesting.
Yeah, big yield areas. Mm-hmm. And the old saying is a bushel a day after the 10th of May. So if you start to whittle away a bushel a day and on corn that was planted after May 10, and a lot of those acres are in Iowa and Illinois and higher yielding areas, it makes it that much tougher to plan on reaching trendline yield. A lot of people would say that trendline yield, it's getting there is going to take minimum of 4 or 5 years with really good growing conditions to get over 180 bushels per acre. If everything goes right, because of the way that yield, because of the way the corn yields climb to the next plateau, it happens by leaps and bounds. It doesn't happen a little bit at a time. You look back over time and we kind of consolidate around the old record, and then all of a sudden, boom, there you're on top of it by 8 or 10 bushels per acre, and everybody's like, wow, oh my gosh, how did that happen? And you start to figure it out from there. And then you consolidate again for a period of time. Well, if we would run into one of the next time we run into one of those years where we climb our corn acres, the corn yields up to that next plateau, we're gonna run right through the trend line yield. I just don't think that with the way the season has gone to this point, that we can count on that happening this year. I'm not willing to rule it out.
Yeah.
But it's going to be tough. It's going to be tough to get to that 181 for a national average trend line, or for a national average yield. Yeah.
I can remember talking to Brian Grete out when he was out on the eastern leg of last year's crop tour. Yeah. And time and again, he was saying things like, it looks dry, they need a rain for a strong finish here, but they started with a solid moisture profile, and on that basis, he wasn't all that necessarily concerned with the way that eastern belt crop was going to finish. This year, he mentioned the La Nina
Yeah.
potentially hot, dry, right at the wrong time for right at the wrong time.
Yeah.
Yeah.
Yeah, as the corn crop is trying to fill kernels,
Yes.
is when the heat would move in and could have an impact on that corn crop later in the second half of the growing season. And it's absolutely a legitimate concern, one that we need to be aware of going forward.
Yep.
Let's do it real quick here. National Weather Service 6 to 10 day outlook. This is for May 20th through the 24th. Near normal temperatures across most of the northwest production areas, including northwest Iowa. Above normal temperatures expected Wisconsin's southern half and eastern half of Iowa, and points to the south and east of that. We've got above normal precipitation sticking in the forecast for May 20th through the 24th, and on the 8 to 14 day, above normal precip for May 22 through the 28th. Davis is going to have your conversation update tomorrow morning.